Hi, it's Stan Reinford, and welcome to this week's market update for May 20th. Hard to believe it is Memorial Day weekend. Hope you enjoy your holiday and everything. And then also on another note, before I get started, do me a favor. I'd love to get more people signed up and go to my social pages. And in the bottom of my email are all my links for Facebook, Instagram, all of them. But one of the things that you'll see over the weekend is I rode in a charity motorcycle ride where everybody dressed up, dapper looking. In fact, it was worldwide. It was called the Distinguished Gentleman's Ride. Got to check it out on my Facebook page. Even Harley, my dog, made a debut wearing one of his dapper hats. So pretty cool. So check that out. So let's jump into it. So again, thank you for all the great conversations and questions and just general conversation. So let's kind of jump into it because we've had some rockiness here, so let's kind of go over it. So, as you know, I always start out with explaining how the chart works. So, on the upper left-hand side here, we have the 30-year Treasury. That's green. That's good today. In the center, we have the 10-year Treasury, and to the right, we have the S&P 500. Below here, we have the 30-year chart, and the higher we are, rates are lower. The lower we are, rates are higher. So, we're down just in the bottom of the chart here. We'll take a look at the 10-year here. And the 10-year, this is the opposite. So the higher we are, that means rates are higher. So we're up right around 4.6 on the 10-year. And we've been down as low as 3.95 this year. So we need to get it down, and it'll happen there. It's just a matter of time. So let's talk about market moving news and the Fed. So with the Fed, this Friday, Kevin Warsh will be sworn in. It's expected within either that day or several days that he'll talk about possibly even increasing rates to calm inflation. We'll have to wait and see what he says, but it's expected that he's going to say something either that day or within a couple of days. In other market moving news, we don't have much going on in Iran, although today they bombed a natural gas area over there, and again, it is what it is. So historically, these people are not the greatest to negotiate with. We'll have to wait and see, and hopefully the best will come out of it. And as I heard someone say today, we're going to plan for the worst and hope for the best. In the meantime, on a different note, NVIDIA reported their earnings today at the end of the day, and they beat all expectations. In fact, I read that 21 out of the last 23 reports, they actually beat earnings expectations. So, which is really good. So, anyway, so we'll jump into it. We'll have to wait and see what happens in Iran, especially with opening up the Strait of Hormuz. Gosh only knows, we want oil prices to come down, and without this stuff happening over there, oil prices are going to stay where they are. So in the meantime, ADP released their weekly jobs report yesterday for the week ending May 2nd, showing that there was an average of 42,000 jobs that were created over the previous 4 weeks each. That would be roughly 180,000 jobs in the last month. That's pretty good. Pretty good. We'll have to wait and see if there's any revisions. Remember, in the past, there's been some revisions downward. So we'll have to wait and see. Let's talk housing. Cotality is still reporting and still forecasting that they expect that the appreciation of homes is going to be between 4 and 5% over the next 12 months. Remember, even though we have higher rates, people are still buying houses. That means that if you do buy today, your home will be worth 4 to 5% more a year from now. If you don't buy today, you're going to pay 4 to 5% more for that same home than you would have today. On a different note, something that's not talked about a whole lot, but I've only seen and heard in a few headlines, is the capital gains tax or capital tax or capital gains exclusion. So on a person filing singly, it's up to 250,000. Married couples, it's up to 500,000. These rules haven't been updated since 1997. There is a proposal out there that would literally increase this exclusion and then also index it for inflation. And look at the last 5, 6 years, how much values have gone up. What this means is that they did a survey and that there's actually some people out there that don't want to sell yet because of the tax that they may pay on this, and they're sitting back waiting. It's estimated that about 15% of homeowners have gains above these thresholds that they would very well have to pay some sort of capital gains tax over and above. So we'll have to wait and see if that's something that comes to fruition. In the meantime, interest rates are in the upper sixes. And again, we're here to help you with your buying or selling, whether it is a primary residence, second home, or investment property. Whether it's refinances, we're helping people save lots of money on refinances. Even though interest rates are upwards of close to 7%, we're helping clients pay off a lot of debt and still saving them several $1,000s a month, and still showing them how to pay off their homes faster than what they would have done with that low, 3-4% interest rate. So again, please forward and share. Remember, we help in every situation, whether it's renovation loans, reverse mortgages, whatever that is. Give us a call. We'd love to help. And again, don't forget, please check out my social media pages. Love to get everybody to friend me there and take a look at last weekend with that ride and everything. So again, forward to share. Have a great week and a great holiday weekend.